Oh, hello everyone, and welcome to today's Forex webinar. And I think, oh, we're actually bang on time for starting. As I said, thank you so much for coming along and joining us for this session. You're not hearing me. Oh, David's not hearing me. Oh dear, that's not very good. Let's have a look. Okay, I'm going to ask the inevitable question, which is actually quite a silly question, but can you all hear me? Not getting any response, David. You sound fine. Thank you. Thank you so much. Oh, must be David's. What have you done? What have you done to the settings? Now you've got it. All right, fine, lovely. Thank you so much. Anyway, right. Before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. For those of you who are coming along for the first time today, obviously we're going to, this session is for the foreign exchange market. We're going to be looking at some charts. We're going to be looking at the charts through the methodology that we call volume price analysis. Details of the methodology are all on the books that are up on Amazon. That's the sort of technical analysis side of the charts. But with Forex, and in fact with all other markets, you really have to look beyond what you see on the chart. No matter what time frame you trade, whether you're a very short-term trader or medium-term swing trader or longer term, you really have to have a handle on the fundamental releases, the sort of almost the economic background against which the price action is developing, as it were. But there is also another element which it's coming more into the fore. It's becoming more fashionable to talk about related markets, doing what's called cross-market analysis, because obviously there is an interaction, there's an interplay between the four capital markets. That's the bond markets, the commodities, the stocks, and the foreign exchange market. Those of you who are on our program will know that in the program we explain this in very, very great detail. And in fact, in our humble opinion, the Forex market kind of sits in the middle. It kind of pulls all these markets together, because it's only through the buying and selling of currencies and exchange rates, it gives you so much information about sentiment, the state of the economy, etc., etc. That's all explained in great detail in the market. But in these sessions, we do refer to, so you'll hear us refer to things like bond yields. We'll talk about what's happening in the indices, what's the VIX doing. And as I said, if it's something that perhaps you've never come across before, and maybe the program is something that you may want to aspire to later, in this box set that you'll find on Amazon, you will find details of the methodology with examples. But there's also a book there called The Three-Dimensional Approach to Forex Trading, where it really kind of lays it all out. It's a bit of a, it's a bit of a doorstop, but it's pretty much everything you need to know. I do appreciate it was written a little while ago, and some of the people that are mentioned in there, they've obviously moved on, but the basic principles remain the same. Now, volume price analysis is this foundation methodology where we look at price action volume. We use candles and candle patterns and support and resistance. Now in this session, I really want to have a look at volume support, how we can look at support and resistance through the prism of volume using the VPOC. And those of you who've perhaps have got our indicators or in the program, it'll certainly make a little bit more sense to you. But even if you haven't, then we'll look at it, because the VPOC is actually based on the principles of a little bit of market profile, but also volume at price. And best way to explain this is on the charts. And finally, very quickly, for the Forex market, we've come up with these very particular indicators to help us determine where the flow is. We use an expression in our student group and in our VPA room. We talk about levels and flow. Levels are, we know, price-based levels, volume-based levels, and the flow is, where is the money going to? And as traders, that's all we want to know. We want, what's being bought today, what's being sold in terms of individual currencies, but also currency pairs. Right now, I really like doing these sessions at this time because it allows us to really get a grip on what's happened since the European session, and we've the start of Europe, and we've got obviously had the London Open. I have actually got here my version of a currency dashboard. David is using Ninjatrader. He has a variant of the indicators that that come with the dashboard. I've actually just got the hourly CSI under here, and I've got the matrix up above, which takes this data and ranks the pairs in terms of, where is the flow going to, which are the strongest pairs. And I've also highlighted the pound because as traders, I read somewhere we're quite local, we're quite sort of parochial in a way, in as much that we tend to focus on the pairs that come to prominence in the session that we actually trade, which is, parochial is probably too strong a word. I mean, it makes sense. We're in the London session, so what is the market going to be focused on? It's probably going to, have quite a big focus on the pound. It doesn't mean pound isn't going to be maybe bought and sold in Asia, but certainly, it won't be, perhaps not as important as obviously the Aussie and the New Zealand. And the Aussie is quite interesting as well because it's one of those currencies that in something like a pound Aussie or a euro Aussie, it will actually move quite strongly in this session. Anyway, this is what this indicator does. I've highlighted all the pounds because the pound is, as we can see here on this line here, it's now moving higher, but it's had a little bit of a pullback. And the pair I actually been interested in this morning and putting some trades on is actually with the pound yen. It's been the strongest of the pound pairs, and one of the reasons it's been very strong is because there's been very, very heavy selling of the yen. Now, going back to what I said earlier, what does the selling of yen, what does that tell us about perhaps what's going on in the rest of the markets? Well, if you've read the books and you've got the program, you will know that heavy yen selling is good for equities. It's good for risk assets. So, a market is in a pretty bullish mood. I know everywhere you read, you can't move from the narrative that these markets are, can't go any higher, can't go any higher. There's got to be a correction. There's got to be a correction. Well, there will be, and it also brings up this psychological issue that traders and investors have, is there is always worry at the top of markets. If you think about it, you've made profit, you're in a trade, or you've got an investment that's going higher and higher and higher, and and you think, oh my goodness, how much further can it go? How much further can it go? It's inevitable that we, a little bit of worry creeps in. And at the moment, everyone's long. Everyone is long. There's no one is selling. Commodities are going higher. The indices are going higher. Stocks are going higher. I think I read somewhere that it's the first time so many stocks are over their, I think, 100 or 50 day moving average. The percentage. There's nothing left to buy almost, as it were. But when you do get into this position in this state, you think, oh my goodness, is this thing ever going to turn over? Well, it will. You just have to look at the charts. There will be the signals there. Volume price analysis will certainly tell you. If you go over to my site, there's a post on, it's actually the NQ, but it kind of doesn't matter whether it's the NQ. It just explains, what you can look at, what you need to look out for when things appear to be so overextended, and they appear at all-time highs. Now, with the Forex market, we are blessed in as much that, there are always selling opportunities. It's an oscillating market. It's a market of much more of mean reversion. With a stock, people don't buy stocks with the principle that they're going to look to, they're going to buy it and then they're going to sell it and then back. But maybe they will do that. But in essence, buying a stock is for investment, and you are going to look for it to move, to appreciate in value, as it were. With currencies, what we're looking for is we're looking for trading opportunities when things are overbought, oversold. As I said, for those opportunities, and that's where we look to using the indicators with volume price analysis and those all important levels. Now, what is the CSI telling us on the hour? Well, we can see here the CAD has been very strongly bought. It's reaching this point of overbought. It's at 90. It's over 80. It's over 90 now, and then the yen is down here. So we would expect a kind of snapback. We would expect a correction, as it were. Now, the depth of that correction may be viable in terms of a trade, or it may be not. And again, it will be your levels that will tell you, and it will be the volume that is that goes into that correction, where it is simply that, and it's a pause point, and it's probably an opportunity to carry on higher. Now, the pound is what I'm interested at the moment. It looks like it's flattening out a bit. In fact, the pound yen has dropped, and it looks like it's even without looking at a chart, what these indicators can tell me is that it's, it tells me what the overall picture is for the pound. The numbers also tell me where we have had the strongest moves thus far, and it also having them like this in a ranking, if you like, then I know that, okay, there's been a good move in the pound yen. Maybe that's coming to a pause point, possibly a reversal. What happens is if the pound keeps on buying, but it stops, a pair, say like the pound yen comes to a pause point, that buying can often switch to another pair. Where there's going to be some divergence, and I know there's no divergence in cable, because although we can see here in the Dixie, this is the dollar, it's had a pretty savage fall recently. This is yesterday after the FOMC. We've had a bounce higher, pretty much off the S3 here, and this volume support line here, and the volume point of control that we have on the Dixie. So we were kind of expecting a bounce off that, which is fine. But on cable, it really hasn't translated to a particularly strong move, because the lines are moving in the same direction. And looking at the value of cable, which is here, it's where is it, minus, well, it's kind of picking up speed. If you were going to look at the dollar, you would have seen a much stronger move in euro dollar, Aussie dollar, and New Zealand dollar as well. So go back to the pound, because the pound is what I'm interested at the moment, just to see how you would use this. Now, this one is highlighted in purple because this indicator has a bookmarking function. So if you really want to keep a closer eye on, maybe if you're in two of the pairs, or maybe three pairs, if you like to trade a basket of pairs, not just pound, whatever, you put them into purple, and it just helps you track, what they're doing. And this is the hourly chart, but you'd have it in multiple time frames as well. Right, going back to very quickly, and pass over to David. Just have a look at what's been happening in the pound yen. All right, here we are. Now, this is the setup that I have. This is MT4. This is the little, so there's been this little pullback here on the pound yen, and I'm just going to talk about volume, support, and resistance as delivered by the volume point of control. Now, in fact, if I just quickly do that now, the volume point of control is this yellow line here. And what it is volume and price over time. It's where you get congestion phases. It's a kind of fulcrum of the market, where the players in the market are in kind of, there'll be a range, there'll be almost like a price agreement, as it were. Sometimes you get a very volatile congestion phase. Other times you may get a very sort of boring one. It just goes on and on, like a bit of a washing line. But it marks what we call the fulcrum of the market, from which the market will then pull away and diverge. And the histogram at the back, you can see here, this is the more it goes over to the left, that's the deepest concentration of this, what we call this transacted volume. Now, what this indicator also does, it then throws out these levels here that you can see here. They're marked off the indicator, and at the extreme, you have the extreme that is delivered by, as I said, by the indicator. And what we use these extremes for is to see at the points at which we would get a reversal. It doesn't mean that they don't pause at these points here that we can see here, but it's really, if you're into reversal trading, what you're looking for is these extremes. And what they also tell you is that if you're in a move and it's suddenly, you know, in the time frame that you're looking at, this is the 5-minute chart, and it actually came off the 5-minute volume resistance level here. Sometimes on the chart that you're trading, that won't show. You'll get something like this and you think, oh, but it's reversed, and you can't see a logical price-based resistance level. You simply go up a time frame, you go through the time frames, and by going through the time frames, the slower you go, and if you find a resistance or a support level, I'm talking about volume based now, that's the reason why, and that will always carry more weight. So that's how these are delivered using the volume point of control. I don't have it on the 15-minute, I don't have it on the hourly, I have it on the daily. The reason I don't have it on the hourly and the 15 is because here we look to use to combine it with price-based resistance. You can, price-based resistance on a chart is, you can measure it, you can display it in many, many different ways. You can use trend lines, you can use a Fibonacci is a way of trying to determine support and resistance. It's those points where the price is likely to reverse. You know, it's going to stop basically. Is it going to pause? We use the Camarilla protocol, and again, if I wanted, if you like, evidence that I was expecting a potential, I would say a pause rather than a reversal, is obviously the S5 here. Now on the hourly, these values are calculated and they are in play for the rest of the week. So although the 5 is not as important as the 3 and the 4, it is still a potential pause point. And in fact, it's a very nice pause point because you've got a shooting star there. But I also use it as potential targets. So in this move higher this morning, what I was looking at is for a move, for a test of the R5. I must admit, I was expecting it to certainly pause, possibly congest, because it's in a, you know, if you look at the daily chart, it's in a very, very nice uptrend. I thought, well, okay, if it's going to stop at the R5, we'll have a little bit of a pause, and possibly, where is the next target? Well, logical is the R6. Now, in between that, you then look at the levels that are delivered. These are daily. Now what's interesting here is that because of this the move since last night, all the daily levels have been you know, they've been taken out, they've gone. So that's why we have them, we have different levels on the hourly chart to give us, you know, something to work with, as it were. But in coming back, where's this going to test? Well, you know, the potential for a reversal down is down to the R6. And then what you do is you combine that with what you see on the volume from the VPOC levels. The one indicator that will help you sort of stay in, if you like, and certainly get you in and help you get out is the Renko. Now, what's interesting about this Renko here is really the move was, although it came off here kind of overnight, as it were, before the start of the open, it was really once it tested the S3, the third levels of the Camarilla, the third and the fourth are possibly the most important. That was the move. This is really my move higher this morning. Then there was a little kind of pullback, as it were. Whether you come out of that, because the way we use the Camarilla is really to see a match between the trend dot and the trend monitor. That was in an in-between color. And you can either come out there, or you can look at what's happening on the time chart, say the 5-minute chart. It also tested the R6. Now, what's interesting, it held there, it then moved, then it tested it again, but this one red bar came up on the trend monitor, and you could think, well, you know, maybe it's maybe it is time to come out. But because it was the R6, you could say, well, I'll wait to see if it tests it again. It didn't test it, and it's moved higher. Now we've got the same situation again, where we've had the move higher. We're beyond all the levels. We know why it stopped, because of the level that we were targeting on the hourly chart. That hasn't moved to bright red, that's red, and you think, well, shall I come out of there? And again, you would look at the time chart. Now, what's interesting is this reversal lower. It's been quite a little snappy move, and what's happened is it's triggered the volatility candle, which is it's when the price is outside of the average true range, but it's got a big wick to the bottom. It's also, we do have another price-based indicator of just what we call the dynamic support and resistance, and this either paints a solid line like this, which means it's a bit stronger, or you have a hatch, sort of dash line where it's a bit weaker. So there is some buying coming in. There's buying certainly in this candle. Of itself, the volatility candle, this is what happens about 80% of the time. Price goes back into the spread of the candle. Now, for me, it's in the direction that I want it to go. So, all things considered, you think, do you know what? I think I'm going to hold on to that. Where's it going? Well, it's going to retest the R5, and back on the 5-minute chart, it's going to retest, which is where it came off the first place, off this volume resistance here. And there's also a price-based resistance here. So by using volume-based support and resistance, price-based support and resistance, price-based, you and levels, you should be able to formulate some kind of narrative that will help you stay in a particular, you certainly get into a trade or stay in a particular trade. And you look at the volume here underneath, is that going to die down? But where's it, logically, if it doesn't carry on, where's it going to pause? Going back to the matrix again of my pound pairs, let's have a see what's happening with the pound. This is the sort of, it's taken a little bit of a swan dive on the hour. What happens here? That's dropped, that was at its top spot. I've got the pound Aussie. None of the other pound pairs are really doing very much. Pound New Zealand, I'm sorry, pound Swiss, where are we? Pound Swiss, that's down at -11. Maybe, well, the Swiss is being bought quite strongly, and you could then say, well, actually, there's quite a lot of buying in the Swiss. Let's pull the Swiss up. Let's have a look. Yeah, I mean, the Swiss yen. Well, the yen is still falling, but maybe that's going to reverse. What also happens, where an ideal trade is where you have an equal force either side in buying and selling. That doesn't mean to say that a pair won't move when there is an asymmetric force, which means that there is such strong buying in one of the currencies that it will still, move. Ideally, you want, something like we've had the CAD yen here, where there's been such strong buying of the CAD and some strong buying of the yen. Right, to get back to my pound yen, let's have a look. Where is it? Let's move that. Let's move my pound here. You're a bit. We've got a neighbour who's a pilot, and I often often tells us about he's been promoted to long haul, although it's a bit he's not not having a lot of flights at the moment. But it's a bit like when you are, if you've ever piloted a plane, or you've even a small one, like David and I have had a go at a small plane. It's a bit like the controls. You have all these instruments that are blinking at you and talking to you, and you think, oh my goodness, am I ever going to get to a point where I can read? They're all giving me different bits of information. Can I put it together in a coherent narrative? Well, it does, as I said. But the first thing is, get a grip of price action, understand how it interacts with volume. You can read that in the books or in the program. Understand support and resistance. That is so important. And then look at the candles, the candle patterns, the wicks. Is there weakness? Is there strength? Is that being supported? And and gradually you will have this coherent picture. So I'm going to hold on to this for the time being, because as I said, I think it's gonna have another run at the R5. Let's quickly have a look at what's happening on, because it's a yen pair, very much to do with sentiment, and the pound yen of the yen pairs has been a bit of a laggard. It's not done as well as the other yen pairs. I'm looking at the Nasdaq. Oh, fantastic, 128. Let's see what the S&P is doing, and the oh goodness, the Dow's up 143. So happy. Well, don't fight the Fed, basically. So wherever you read about, the great crash is coming. Well, the great crash will come, but it ain't coming today.
Hi everybody. Hopefully you can hear me. Hopefully you can see my screen. Thanks, darling, switching me over. Just for a change, I thought we'd start with Trading View. I've got Trading View, I've got Tradestation, and I've also got Ninjatrader running behind. So as I say, just for a change, I thought we'd start with Tradestation, Trading View. The only reason it's just down at the bottom here, we had a couple of emails just wondering how we're getting on with this account. If you've not been with us earlier in the year, basically this started off around about $800 and something, I think it was 830, something like that. And all I'm trying to do is just to show you that, trading, this is longer term stuff. This is not intraday scalping, this is longer term. And basically so far I've managed, I think last time we looked, it was about $920. So we've added another $130 odd, which you think, well, that's not much, but that's, if you convert that into pips, that's 1,300 pips. So since we've started this, we've been doing about over 2,000 pips now. And by the end of the year, what I'm going to try and do is basically double the account. So get it up to $1,800, $1,900, something like that, which will be 8, 9, 10,000 pips, which is serious stuff. And for those of you on the program, and if you're not on the program, it's the point we make all the time that if you can prove consistency, it doesn't matter if you're doing it on a very small account like this or a much larger account, because all it comes down to is consistency. And if you can bag enough pips consistently, then all you are doing in the future is simply leveraging it up, not in terms of leveraging the account, but in terms of adding trading capital to your account, and you are just trading bigger lot sizes all the time. And that's really all it comes down to. If you can make 100 pips a week, 100 pips a month, whatever it is, 50 pips a month, and you can do that consistently month after month, then that is the goose that will lay the golden egg, because from there, it's a question of just stepping up, and we explain it in the program very carefully. So you start with micro lots, and basically you start with trading one micro lot. It's not about making money when you start trading. It's about finding consistency. And I think after 3 or 4 months, we suggest you step up to 2 micro lots. And after 5 or 6 months, you step up to three micro lots, and so on and so forth. And that gives you the opportunity to then scale in or scale out once you're trading multiple micro lots, and then you gradually build up your expertise in that way. It's one of the important modules, one of the many important modules in the program, but it really does lay out the foundation of what this business is about. When you start, I know you don't want to hear this, but when you start, it's not about making money, it's about finding consistency. It's not a get rich quick scheme, but once you've cracked that and you've got the consistency, and it's part of the funding program. That's why we start with an evaluation. It's a live trading account, so you're trading our money, you're trading 5, 10 or 15,000 to start with. So you're not trading a demo account to start with, you're trading live money. But essentially what you're proving to yourself and you're proving to us in that demo, in that evaluation stage, is that you have got consistency. And if you've got consistency, then we give you more money and we multiply it by 4, and you go up to 20, 40 or 60,000 of our money, because you've proved to us you've got consistency and you've proved it yourself. And this is all this exercise is about. The trades I've got running here are all basically with short dollar, short yen. So basically it's a sentiment basket. It's just a sentiment that's had a nice push from yesterday. You can see where we are, up 10.55. Day P&L is 43 and gross is 37. So, there's 300 or 400 pips in there, which is very nice to have. I've got the Aussie up here. This is on the matrix. Got the Aussie up here. Lots of buying Aussie. This is on 3 minutes. Your Aussie needs to drop down there, but basically it's buying Aussie on the faster time frames. So that's where we are in terms of that particular account. But as I say, it's a longer term approach. These are not intraday scalping opportunities. I'm in and out here. I don't have time to go in and out of this one every few minutes. So basically, these are longer term. They're held overnight. They're held days, over weeks maybe, and might even scale into these as well. Got some scaling opportunities. Just want to show you this. Just an update on the indicators. This is the accumulation distribution indicator for TradingView. All the indicators are now done. They've been tested. They've been debugged. All we're doing now is we're working on the support pages, and once those support pages are done and the products have been added to the quantum trading shop, then they will be released. So I'm hoping that's going to be in the next couple of weeks or so. If you have the full package already with us, don't worry, you will get these automatically added to your account with your TradingView username. We will go through all the customer base. So if you've purchased it in the past, don't worry, they will get added for you automatically. If you haven't purchased it, it's not a bad time to buy it because the price will go up. It'll go from 677, which is what it is at the moment. It'll go up to 894. So if you buy now, you get all these indicators free of charge. This is one on the accumulation distribution. But I just wanted to show you this, how powerful it is all about levels. As Anna said, you can see it here. And the wonderful thing with this particular indicator, which is exactly the same as the one on Ninjatrader, is it actually gives you these little flags to tell you not only how strong or weak that particular level is, but it also demonstrates that by the thickness of the line. So you just literally eyeball it. You don't have to have these flags on. You can tick them off. But it basically gives you a straight through view of the strength of the region. Very, very strong here at just below 0.78 for Aussie dollar. Now, if the Aussie dollar breaks through there, that becomes a buying opportunity for another rally higher, possibly on up to this level here at 80. So that's one I've got my eye on, certainly for as far as this basket's concerned, at any rate, waiting for that to break through there. But you've also got these great support levels below. You've got one here that's less strong, but nevertheless, you can see how it held the platform up here. And we've got a stronger one here up at 5. That was tested yesterday and held in place. So we're just waiting for a breakthrough of that level there. So I just wanted to show you that. Yeah. Oh, sorry. Yeah. Sorry, beg your pardon. Where is it? That one. That's the matrix. Sorry, you're talking about the heat map on the matrix? Okay, that is the matrix, right? That is the currency matrix. You can attach this to any time frame you wish. This is attached to a 3-minute, but if I change that, you can have any of these time frames down here that you like, whether you want seconds, hours, days, whatever it may be. So this is basically the currency matrix, which is exactly the same as you would find on MT45 and also on Ninjatrader and Tradestation, all exactly the same. The difference with this one is it has these levels here. You won't find that on the other versions. We will port backwards onto those other platforms in due course. And that's the differentiator on TradingView, is this actually gives you a heads up in terms of, you can think of it exactly the same way as you find on the currency strength indicator with the levels at 80 and 20, which gives you a benchmark for when a currency is either approaching an overbought or oversold state. It's not a signal per se. It's not saying I will sell here and buy here. It's just saying, look, this currency is getting to an overbought or getting to an oversold condition. It's exactly the same here, and that's why we put these levels on. So you just know without having to think or remember. The way we used to do it was we used to say, well, look, once you start using this for a few days, you very quickly get a feel for what's high or low on this particular time frame. Now on TradingView, you don't have to worry about it. We'll get these added onto the others in due course. So currently Aussie dollar here is 8.5, and the all-time high is 10.8, and the average is 9.6. So you know straight away that this is there or thereabouts in terms of an extreme. Down at the bottom, on the other hand, it's a completely different picture. All-time low is at 17.3 and average is 13.7. So we're only at 8 here. So in terms of potential travel, if you like to look at it that way, this particular scenario has got an awful long way to go before it gets down to these sorts of levels. So it just gives you an indication of where those particular levels may be. And obviously this is set up, the all-time high is set up over a certain number of bars, and you can adjust it. I can't remember what the default is off the top of my head, apologies, but you can change that accordingly. You can see how it's now picking up the fact that we're reaching an all-time high in terms of the number of look-back bars. I think it's 7 or 10, something like that. And that's basically how it works. In terms of the, have I got the currency heat map up here somewhere? I thought I had it, perhaps I haven't. No, I haven't, sorry. The currency heat map, the big differentiator with the currency heat map on this platform is that you can set that to any time frames you like. So whereas the currency heat map on the other platforms you can't, you have these fixed ones that we've coded into the indicator. For whatever reason on TradingView you can, and with the currency heat map you can have it set to anything that you care to name in terms of timeframes. And there's 5. I will put it up. I'll pass back to Aaron and I'll drag it out and put it up on the chart. These are the Renkos that we've also developed. This is the time accurate Renko, which you won't have seen before anywhere because no one else has one. But basically what this does, this aligns the Renko brick in real time. In other words, the leading edge of this is exactly aligned with the leading edge of your time-based chart. So it tells you how the bricks have developed in terms of a relationship with the time. When you look at a conventional Renko chart, these don't tie into one another. Some people think they do, they don't. I know you can just pull it up and say, yeah, okay, that's my Renko, and it's a fantastic way to try to pull up the Ninjatrader versions. It's just, Renko bricks are just brilliant because they take out all the noise, and if you use them in multiple time frames, I'll show you over on Ninjatrader. But when you have it aligned with a time chart like this, it's almost impossible to tie in this price action with the price action based on the time-based chart, because the two work independently in the sense that this will close off, what are you on, 15-minute here? This will close off after 15 minutes. This will close off however soon the metric of the box size is met. And that's why we've developed this one in conjunction. They come with the package or with the indicators. This is what we call the time accurate. So basically the bricks here are aligned with here, and it just gives you this really nice stepped version of what is going on, again, set to the optimal box size. So let's drag that out the way, just pop that over there, and I'll pull up the heat map and bring that back in a minute. Right, this is, where are we? This is what's going on in terms of US equities right now. We're on Globex, 5 minutes along the top, daily down at the bottom. Just to give you a fix on sentiment, you can see it's pretty bullish. This is what's going on in terms of the ES. It's trying to break out up into new high ground, very bullish. That was after yesterday's sort of meandering, lackluster stuff. And overnight, we've had the bullish sentiment pretty much across risk markets per se, which is why, you know, we're doing really well on the account over there. Let me show you the Renkos, multiple Renkos, which I was talking about. This one, there we go. This is basically on pound yen here, which is selling off a little bit. I've got long positions over on the little account there for the longer term. So this is just, you know, it's a correction. This is the Aussie rising strongly, you can see. That's the pound selling off, the yen starting to kick up a little bit. But these are the sorts of trends that you get on a Renko. And what I've got here is I've got a 15-second, a 30-second, and a 1-minute time base along the bottom. And then at the top here, I've got the equivalent Renko. And the beauty of the Ninjatrader Renko optimizer is that if I select the time frame to match down here, this is, and we select the 15-second, what it will do is it will automatically tell me and deliver the optimal brick size. Okay, that's changed a bit. So we're now going to, okay, going to 10, which in currency terms is 1. So basically each of these bricks is now 1 pip. I'll just update this one, go to 30-second, see what that is. It'll be slower than that one, or the brick size rather will be larger if you like. There we go. So that's now gone to 1.6. That's 1.6 pips on that one. And then if we go across, finally, just do the last one, which is on a minute. Just nick that one on. And then we're all aligned. And that is basically delivering that's 26, that's 2.6 pips. So bigger boxes on that. And basically that is a broad principle. First of all, the optimizer delivers, as the name suggests, it delivers the optimal brick size. So you are not selecting the brick size. The indicator is delivering the optimal brick size for that particular pair or that particular market, that particular instrument in that particular part of the session. So we're running on a pip, 1.6 pips and 2.6 pips here. And used in conjunction with the trend monitor and the trend dots, it's just a terrifically powerful way to trade intraday. And obviously what you've got down at the bottom here, you've got VPA analysis, you've got support and resistance, levels on the accumulation distribution indicator, you've got the volume point of control here, you've got volatility triggers, you've got everything else in exactly the same way. It's just a powerful way to do it all. Let me just pull up Tradestation. This is running on futures. And the reason I just wanted to show you this, in fact, when Anna was talking on the pound, all these, this is on futures, as I say, this is 6A, 6B, 6C, that's CAD dollar, that's not dollar CAD. 6E euro dollar, 6N is New Zealand dollar. So I've got 5 of them here, and I've got the dollar Swiss over here down the bottom right hand side. The beauty of running on Tradestation in this way is that when Anna was talking, these 4 timeframes on cable, 3, 5, 10, and 15, all triggered with the volatility candle over here, which you see over on the 5-minute time frame. They all came up. Instantly you go over to that chart and you think, why is this, what's going on? Why is the volatility? Well, there is. Clearly we've had the volatility trigger come in. It's instant, instantly there's something going on. You see the high volume coming in. You're expecting at least a congestion phase and possibly a reversal, but it triggers automatically. Just move that out of the way. It triggers automatically. And the nice thing with the indicator, I'm sure it comes up in real time. In other words, it will trigger before the candle has actually closed on you. Now, on a 1-minute time frame or a 15-second time frame, that's not hugely significant, but I can tell you it's massively significant if you're on a 15-minute time frame, as here, for example. If you were trading this short and you get one of these, 99 times out of 100 you close out. It's as simple as that. Don't even think about it. Just if you've got profit in there, take it, close out. What does it matter if the move continues to the downside? You're short and the move continues to the downside. You just jump back in again. Once it clears that candle, it's fine. What have you lost? Maybe you've lost some pips in here, so what? But if you want to sit through congestion, fine, so be it. It's a much tougher decision if you've got a loss position and you get a trigger. That's a much harder decision. You have to decide based on what you're seeing on the chart, whether you're going to sit through it, whether you're going to hope and pray that it goes in your direction again or not. There's nothing you can do about it, simple as that. But if you're not in the market, you've just got to sit out, wait for the congestion to pass, and then look at the opportunity as it develops, as the market breaks away from that particular candle. But I just wanted to show you that because on radar screen, this is radar screen on this is Tradestation Global, which is being driven through one of our interactive brokers accounts. It's very powerful because I can trade off the screen here. And obviously the data feed comes from IB. So I can trade pretty much any market I like through here. But the beauty of it is this is the Tradestation front end. This is radar screen, which really sets the platform apart from everything else. It's so powerful. I've got the trend monitor up here, and I've got the trends indicator down the side here. And this just pulls in the data. It just tells me what's going on. You can eyeball it. I've also got these symbol linked and interval linked over here. So if I click on any of these, it'll just change automatically over there. So I'm now I can look at the 10-minute. I can go back and look at the 3-minute. It's very, very rapid in terms of analysis and the management of trades and finding out opportunities without having to search through multiple workspaces and all the rest of it. It's hugely powerful. And of course, we've developed the indicators to work alongside that as well. This is, as I say, this is Tradestation Global. So this is on IB. This runs on 9.5. And then we've got Tradestation Securities, which runs on 10 and above. And on that, you have up to 1,000 cells that you can run on here. I think on Tradestation Global, you can run 400 or so. So if you have an IB account, it's a great partnership. You can trade through it and link it straight through to Tradestation. In fact, you can also do that with TradingView. I haven't done it yet, but I will do. Where you saw the FXCM account, I've got a Tradestation account, and I'll link that on there as well. So you just see how that one works out too. Just drop that out of the way. Let's go on to the time-based charts for a moment. Where are we? There we go. That's what I wanted. There we go. What have we got? CAD yen. We're long CAD yen over on that small account. It's been a really nice trade. I've got some CAD yens on there. I've got Aussie yen. I've got pound yen. And in terms of dollar pairs, it's short dollar CAD and long Aussie dollar. I think that's pretty much it. So this is what's been going on in terms of CAD yen. Really nice, strong move, and no reason to come out of that. Partially driven by oil, although how oil has been waterlogged, but it picked up some momentum yesterday, so that's helped it ease higher. Just wanted to show you. Here we are. A little VPA analogy anomaly rather, apologies. And I appreciate this is 5 minutes, and I appreciate it's a little pullback, but what it gives you is the confidence to understand one of the reasons why the market has behaved in the way it has when you're on a chart. And you can see it here. It's a really nice little example. We had the little up candle, nice widespread, and bear in mind these are, these are hardly big moves. These are what are we talking about? A few pips here, 3 or 4 pips or whatever. But the principle is exactly the same. So you have a little move and you think, oh, okay, fine, that looks nice. I'm quite happy with that. Decent volume under that one. And then you get the next one, and you get almost identical volume, and you get this tiny little candle with a very narrow wick and narrow body, and you think, well, what does that tell you? Well, it's telling you that the market's not very strong at that point. It doesn't automatically mean it's just going to reverse and collapse all the way back down here. But what it does tell you is it tells you that there's some weakness. So don't be surprised if the market pulls back, which it has done. It's reversed. It's not, but again, it's only what 6, 7, 8 pips, something or the other. It's not dramatic. But that's the power of volume price analysis. It calms the emotions when you're in a position and inevitably it pauses. It's maybe rampaging higher or collapsing lower, and then it stops, and then it starts to stutter up the other way or stutter down, and you think, oh my goodness, should I close out, blah, blah, blah. And that's what VPA gives you. It basically partially answers that question as to what to expect next. Why did that happen? Was it hitting a level? Were we hitting a VPOC area? Were we hitting some strong resistance or support? What were the indicators saying? But VPA also tells you that. That's one of the powerful applications. It just gives you that confidence to understand why something has happened from a VPA perspective. And the other powerful aspect of VPA, which is truly awesome, is when you're in a position and you've got a primary trend and it's going gung-ho, and then it starts to reverse against you. If you can interpret whether that is a primary to primary move or whether it is a primary to secondary move, in other words, it's only a minor pullback or reversal, that is one of the most powerful applications of VPA, and it's something we cover in detail in the education program. Because the reason it's so significant is because it will help you to stay in a trade. And the biggest factor in this business is not about understanding the markets, it's not about how good a trader you are, it's about being able to stay in a trade once it develops into profit. Because if you can do that, that is what actually makes the difference. It's the standout difference between traders. It's the ability to sit through and understand, yeah, I've got some profit, but I'm not going to be emotionally triggered into taking it off the table. I'm going to allow it to run. You let your profits run, and your losses, yeah, you have lots of small losses, but the big winners have to be big winners. You can't run with lots of small losses and small winners as well. You have to let some of these profits run. And that's the biggest thing. That's the hardest thing to do in trading. When you've got profit in there and you want to take it off the table, of course it is. It's your automatic, that is your automatic reaction to it. So I just wanted to show you that. It's a really nice little example of VPA in action. Got lots more here. We're down at the VPOC here, so where's it going at the moment? Not going nowhere fast at the moment in terms of that particular time frame at any rate. And certainly in terms of this CSI over here, we can see it selling off. Just have a quick look over at the multiple CSIs. I'll pass back to Anna. Yeah. Where are we? Let's have a quick look. Lots of buying of Swiss franc at the moment, the green line. Really strong, and what we're looking for constantly certainly from a scalping perspective, intraday trading perspective, we're looking at these lines and we're looking for strength in one and weakness in the other. So we've got lots of, this is the Aussie still buying over here, still buying over in 15-minute, very strong Swiss franc, yen down here at the bottom, still beaten down. So you might be looking possibly in sometime today for a reversal on the Swiss franc. It'll come. It'll sell off, and perhaps the yen will rise. Maybe that'd be one that is an opportunity as a reversal opportunity where you get in early. Right, I'm going to stop there and pass back to Anna.
I just want to round up on a couple of things on the pound yen and make a couple of other points to do with the price action and the trigger of the volatility candle, because volatility is just as we've described in our various books, and it's a compression of time. This energy suddenly comes into the market, and sometimes it can be totally unexpected. It could be well, you know, it used to be old Donald tweeting, and maybe Biden tweets, who knows. It, for whatever reason, it comes in. Now what happens with volatility, we saw here on the 5-minute chart of the pound yen, we had that buying coming in. Because we know it's buying because we've got a wick to the bottom of the volatility candle. As I said, about 80% of the time, you have a retrace to within the spread of the candle. Then we had a hammer candle at the bottom, so obviously clearly that's buying there, and there's also a support and buying off this price-based line. But what's interesting is you then look at the volume underneath those two candles, and this is where the volume comes in and helps to establish whether what you're seeing is basically genuine. I had on my Twitter feed, someone commented on a post that was on the site. It was about oil, actually, and basically it was the comment in the post was, part of the analysis was that essentially there was a ton of volume had gone into an up candle, but it hadn't gone anywhere. So, and I'd written, well, you know, clearly it was anomalous. Effort and result were not in agreement, so they had to be selling. And the comment from this said, oh well, you know, if you don't use cumulative if you don't use, is it cumulative delta, David, it's called? I think it's called cumulative. It's essentially where there's some platforms offer, and I think there's indicator, which basically breaks it down between the buy and the selling. And also, if you have access to time and sales and you look at level 2 data, basically what he was saying is you can't make that judgment simply by looking at the candle and the volume underneath it. Well, I beg to differ, because if you have a massive amount of effort going into something and the spread of the candle does not agree with the effort, as I said, effort and rate, it is an anomaly. So it doesn't matter that you can't actually see within that candle, you know, where the breakdown is between the buying and the selling. You know, there may be, you know, the pressure of volume is not being seen, is not being reflected in the price action. I would also make the point that, you know, saying highlighting to me, oh well, you know, the market orders are potential orders. They are what are called standing orders. They are there. It's where the banks and the institutions, or who, you know, the big players, they put you know, orders out on the market where they possibly be looking to buy and possibly looking to sell. There's an awful lot of spoofing. The only orders which are valid are what are called time and sales. Those are the ones that have actually gone through the market, and we will have a look. We'll be doing a lot more about time and sales, certainly in the stock webinar, and in the particularly on the stock, because that is a confirmation. Given that most traders don't have that, if you understand this relationship between what the volume is telling you and what the candle is telling you. So first of all, that volume is lower than that one, and it's quite a big, you know, there's big range in that candle. There has to be an anomaly. So this, you know, reversal higher is not going much, you know, it's not going to go very far, as it were. And also, you know, we've got our other indicators to tell us that, you know, there is selling coming into the pound generally. Now, what happens now is support and resistance comes into play again with the volatility candle again. With volatility, we can have this reversal. We can also have a period of congestion. After volatility, the market has to calm down, which is why you get the congestion, and it will, you know, it'll basically do nothing. But according to the CSI, the market is selling the British pound reasonably strongly. So this is where we'd look, this rotation, that you go into another pair, and in fact it's been picked up, as it were, with the pound Swiss, because there's been very strong buying of the Swiss. There's been a cross on the CSI. The CSI works both as a reversal indicator, obviously at the extremes, that when the lines actually cross, we know the trend has been you know, it's been underway, but there could be a potential to enter that trend. So what we wait for now is the break of the low of the volatility candle. Where's it going to head to? Well, you've got the volume point of control straight underneath. And what you also have to bear in mind is there is a kind of rhythm to the Forex market, in as much as you know, we're now almost 20 to 12, kind of moving in towards, it's not quite the US session for Forex. Obviously the actual open is at 2:30. That's when the cash market's open. But once a move has happened in this period from the London Open till about now, it tends to die down anyway. But that doesn't mean to say the buying and selling necessarily stops in these pairs. So very, very quickly have a look at the matrix at the dashboard. We can see here, this is what I mean about this cross. You know, they're still buying in the Swiss franc. This is what I mean. You can use the CSI in this way by looking for these crosses, and you can set alerts up for crosses. On Ninjatrader, you get this sort of klaxon, which tells you that on a particular time frame there has been a cross of the two currencies, and that's often, you can go and have a look at it and you think, oh, well, I know I've missed it, but you know, maybe there is an opportunity. And how that translates into the actual thing, it's the chart itself. Well, it's quite interesting. If we start up with the daily chart, we're actually in a congestion phase. It's not as deep as this one. If this carries on in this range, as it were, this indicator will drop and we will get fresh levels of support and resistance from a volume perspective. But it's kind of, you know, it's sideways with a bearish tone, possibly. It's got a little bit of support there. Let's go and see if that translates to some price support on the hourly chart. As I said, these levels are here until tomorrow, basically. So we've got the S1, which if we look right back over here, it's quite an important level in the past where it's bounced off. But we can see the range that the pound Swiss is actually in. Now, this is the hourly chart, but you as a very short-term trader, this reversal, this swing down from the R3, which we look back here and see, this is a really nice channel. There may be enough in there for you to say, do you know what? I think it's worth me taking a trade. And this is the Renko, but you can see it's very, very spiky, reflecting when a price action on a slower time frame is moving sideways and it's in a range, unless it's a very wide range, you will get what's called two-way price action. It could be good two-way price action, or it could be choppy and not so good price action. And you know, whether you decide to take a trade is pretty much going to depend on you. And we can see it reflected here. It sort of came off here. Then we've got where's the volume point of control? It's actually the R2. We had that kind of break lower. It's now bounced off this volume support region here. I've got the lines of the CSI, a lot of moving, you know, in parallel, which tells us that it's in a congestion. But what's more important is, because it's in this range, you're down to the R1, this level here, where, as you can see, it's bounced off previously. So possibly this rotation into the pound Swiss, well, it's awfully interesting, but it's got an awful lot of, you know, levels it's got to get through before it could possibly be a viable option. Now, this pound is still selling off, you know, you can see that quite clearly. Is the dollar still rising? Well, what else have we got? Well, we looked at the New Zealand. All these numbers here on the hourly chart, they're not really terribly interesting. You know, the pound yen possibly for a move to the downside, because certainly they're selling in all the other pound pairs, and the euro pound is moving higher. So clearly the market is, you know, looking to sell the British pound. It may be worth waiting to see if that develops into a really downward move, but it's a yen pair and its sentiment is very bullish at the moment. Yeah, it's been lagging, but you know, look, where are all the yen pairs at the moment? Let's have a look. Well, they're all let's have a look. Sorry, look. Yeah, they're all stacked up at the top. What does that tell you? It tells you sentiment is very, very positive at the moment. And as I said earlier, the pound yen has been a bit of a laggard. And so, and along with the euro yen, what are they still buying? They're still buying the CAD, they're still buying the Swiss yen, the New Zealand. Not huge numbers, so I'd expect to see, you know, some sort of turnover. But bear in mind, if the indices are going to carry on higher, these lines can stay up here and down here for days. That's what you've got to remember. It's really difficult, you know, when things are at all-time highs. It's with the indices at the moment. Traders are constantly trying to short them. Well, it can't go any higher. It can't go any higher. Well, do you know what? It can. And you know, you've got to develop a sort of tactic where you look for the reversals. Is it a viable reversal? Volume will confirm that viable reversal. If not, volume will also confirm if it's a continuation of, you know, the upwards move. Right, I'm done. I'm going to pass over back to David. Thank you so much for coming along. We've got, what time's the next one, David? 2:15. We're going to look at some futures, then we're going to have a little break, and then we are going to do our stock one. People say, well, you know, but I trade Forex, why should I come? And, you know, even stock people will say, why should I come to Forex? It's because this methodology you can apply to whatever you trade. There's other factors you have to take into account, but essentially a chart's a chart, and a VPA, you know, the methodology is applicable to whatever you're trading. So I hope you've enjoyed it. We will be back next week. Not sure of the day. We chose today because it got the Fed out, you know, got the Fed out of the way. It was very frustrating before the Fed. Markets don't know what to expect. So it's really nice to have it post such an important event, as it were. And of course, it's the end of the month now. We're going into May and a new trading month, so you know it's a nice time. Sometimes, you know, a lot of people take what's called a long weekend, so you know, we'll see what happens between now and tomorrow. So thanks so much for coming along. Let me just pass back to David. If you've got any questions and we haven't answered them on that, I think David has. If we haven't and you're still not clear, or you want more information about the indicators, the program, anything really, you can drop us a line. You can drop David at quantumtrading.com, or you can drop me a line, Anna at annacooling.com.
Hi everyone, back again. As promised, Chris, I think it was, I just moved that out of the way. I promised earlier on to pull up the currency heat map. This is the currency heat map on TradingView, very different from the heat map on the other platforms, not least in the way it appears. But you can, the big difference is what I've done here is I've set up these 5 time frames, 1, 2, 3, 4, 5 minute. You can basically choose any particular time frame you wish, and that you cannot do on the other platforms. It's just a peculiarity of coding that we have this option to do it here. We are going to have a look and see if we can do it on the other platforms, but it's certainly, you've certainly got it here. So if you're a scalping trader, you can set it up in this way, or you can go out to slower term trends, swing trading, whatever. You're limited to 5, but obviously you can run multiples of the heat map, so you can have as many cells as you wish. Now the question you might ask is, well, what's the difference between this and the matrix? The difference is that the ranking ladder down here on the left-hand side is weighted. So the currency pairs here do not move at the same speed as on the matrix. The matrix moves according to the time chart to which it is attached. So if you're on a 1 minute, they will move very quickly up and down the ranking ladder and show you, you know, sentiment across that particular matrix of pairs. This, on the other hand, is weighted. So in this particular example, the 5 minute time frame will carry the most weight, the 1 minute time frame the least weight. In the context of how these will move, yes, of course they will move relatively quickly because you're on a fast time frame spread here, but they will not move at the same speed as the matrix because of that weighting element. In other words, if this particular pair, New Zealand Swiss, and indeed it is, it's bullish across all these time frames, and it's bullish on the 5 minute, the one that will carry the most weight is the 5 minute. The one that will carry the least weight is the 1 minute, which is what you'd expect to see. Exactly the same down here. Pound New Zealand is the weakest on this particular scenario, where you've got bearish sentiment right the way across the 5 time frames, and therefore that's what's holding it down. clearly you've got strong New Zealand buying, which is pushing it up here because you've got 2 or 3 other New Zealand dollar pairs here as well. So there's obviously a fair amount of New Zealand dollar buying, but that's the big difference. This is weighted on the matrix, it is not, and you can choose any combination of timeframes you like, but you are limited to 5. But of course, you can run multiples on the chart, so you could have an infinite number. You could have every time frame that's available on TradingView. So there we are. I hope that answers that one for you, Chris. And this will be, as I say, this will be available along with, so you'll have the currency heat map, the currency array, the currency strength indicator, which is already available, and the currency matrix. So that will compose the 4 key Forex specific indicators on TradingView, which will be available as a bundle package in exactly the same way, the currency dashboard, in other words, in exactly the same way as they are on all the other platforms. In addition, we've now added the volume point of control. You've got the accumulation distribution indicator, which is equivalent to the one on Ninjatrader. You've got the Renko, and we've updated the Camarilla. So you've got 2 versions of Renko. We've updated the Camarilla, and all the other indicators are also updated to the latest version of the Pine script. So they've all been updated. It's been a huge amount of work, but as I say, we are nearly there. We're just doing all the support pages and then adding everything into the quantum trading shop. And then all the prices will go up, and that will also apply to the quantum trading education. Where are we? The quantum and trading education package for TradingView, which is on here somewhere, somewhere or the other, down there. That will also increase in price because the full package has increased in price, so it will be aligned with the MT45 price as well, as far as the education program is concerned. This is the funding program that I was talking about earlier on. This is only available to students. It's not available to anyone else. It's purely there for students. And basically, you have the option to start at 3 levels. You start at £5,000, £10,000, or £15,000. There's an entry fee. It's a one-off fee down here. That's it. You don't pay any more. And the risk on you is nil because we are taking the risk. It's our money. You're trading our money, basically. So there's no risk on you. You can keep your own money to trade your own accounts. And as I say, it's all about finding consistency. There are very simple risk management rules, as you would expect. There's a simple profit target that's set. Once you achieve that profit target, you get a percentage of that kickback, and then you move up to the next level. We multiply these by 4, so from 15,000 you go up to managing £60,000, $60,000 rather. And at that point, you then are able to trade other markets up here. You've got some indices and you've got gold. So we expanded away from the 28 pairs, which you're only allowed to trade at the initial evaluation stage. We give you more responsibility and a lot more money. And in addition to that, we increase the percentage of the rebate up to 50% profit. So the profits you make, you get 50% back from us. And then when you get up to the 1 and 2 million level, you get 60% back there in terms of profit returned to you, and you get paid that monthly as well, so you're earning a monthly income off your own back. And the reason we put this program in place is very simple, for one reason and one reason only, to give our students the opportunity, having completed the Forex trading program, although there's no requirement to do so, you don't have to complete it before you join the funded, it's an option, the funded. But it gives our students the opportunity to put that knowledge into practice and basically start to profit accordingly. So it's a complete program, if you will, of education and then moving you into a funded program. But as I say, the funded program is optional. You don't have to join the funded program, but it's there if you wish to do so. And you can go all the way up to $2 million at no risk. It's our money you're trading, not yours. In terms of the indicators, you'll find them all at quantumtrading.com, MT45, Ninjatrader 7.8, TradingView, and Tradestation. 2 versions of Tradestation, as I mentioned earlier on, Tradestation 9.5 and Tradestation 10. That's Tradestation Global and Tradestation Securities. And of course, with Tradestation Securities, you've also had both the Tradestation platforms. You've also got all the radar screen options as well. As I say, on TradingView, the indicators will be available hopefully in the next couple of weeks or so. And if you have the full package, then you will get them automatically free of charge. It's just the way we work and the way we've always worked. And indeed, if you invest in a full package in the future, you'll get all other indicators we develop. It's just it's what we've always done since day one. It's just a really nice way of saying thank you to you for investing with us. It's as simple as that. And you'll find Anna over here, annacooling.com, all the books up there on Amazon, Kindles and paperbacks, and all the links to all the various sites, and there are various posts down there. Selling may go away for your stocks. No, we think that's still a lot more bullish sentiment to come, which is why we're holding on to those positions on the little account, and we've got some pretty big positions in terms of selling in on some other accounts as well, which we held for some time. So it's been a really nice ride higher with a lot of money going in there. So that's it. Hope you've enjoyed it today. See you again soon. We'll be back at 2:15 our time, and we hope you've enjoyed this particular session. And thanks for coming along, spending the time with us. See you soon, and bye for now.
Did you say next Tuesday?
No.